As a business coach, I get asked quite a lot about what are some of the corrective actions that a business owner needs to take to get their business back on track and earning them the level of money that they need to be earning in their business. When I start with a client, one of the first things that we need to be doing is identifying how much money they need to have to get out of their business so that they can either sell their business or go into retirement or head towards going to their nirvana, whatever that nirvana may be. So the first thing we do is identify how much money do they need in the longer term. So I start typically with this little piece of paper here. And what this does is it just asks people, have you planned enough in your business to consider where you need to be going in the future? So the example I've got in the hard copy paper, I've also got on this example behind the board. And I'd just like to step you through so that you can get some thoughts about where you need to be going and the questions you need to be asking yourself about your business so that it delivers the results that you need it to deliver. So we start off by looking at some of these questions. And the first question we'd ask you is how much are you spending currently out of your business to live? Now, in the example I've got here, I'm suggesting that we need to spend, or that you are spending $80,000 a year. Now, if you're spending more than that, you need to put that number down there yourself, and then we'll follow through on this calculation. We're assuming that your current age is 50 years of age, and we're assuming that we come down here and you're going to be retiring at age 60. And we're going to assume that you're going to need to fund your retirement until about the age of 80 in this example. So when we go into retirement here, we're going to go from age 60 to 61 to 62 to 63 and so on. And in the first year, we're going to want to have $80,000 a year because we don't want our standard of living to drop. And in the second year, we need another $80,000 a year. So that's already two lots of $80,000 a year, which is $160,000 a year. So now it's really just a simple calculation. We look at $80,000 a year times 20 years, and the simple answer to that is 1,600,000. So that's the target that we've got to have somewhere. It's got to be in shares, stocks, bonds, real estate, property. It doesn't matter where it is. It can be under your mattress. It doesn't matter where it is. But it's just got to be there, because otherwise you're not going to be very happy if it's not there by the time you get there and you find out that the money's not there. And if it's not there, it's going to be Groundhog Day, because you need to repeat and repeat and repeat and repeat your business until you get that money available to be there when you're actually ready to retire. Now at this stage, I need to remind you all that I'm not acting as a financial planner, and I'm not acting as your accountant. So please go and see either of those professionals to get some guidance and advice on this. This is just to get your mindset straight to say, well, how much money do I need to have coming out of my business so that I can actually fund my retirement when it actually does come along. So the target we've got down here is 1,600,000. Now imagine if you've got a mortgage on top of that to pay for your current house, because when you go into retirement, you've got to have your house paid for. And let's say you may have $400,000 onto it. You would need to increase that to $2 million of savings, because it needs to be paid for by the time you get into retirement. So you can draw that money down to live on. So this is the target, and this is how we're going to work this thing out. So in this example, we're age 50, 10 years to go till we retire, and we're going to be living in retirement for 20 years. So 10 years to save for 20 years in retirement. So we can see that we've got our work cut out for us. So we simply take $1,600,000, we divide that by our 10 years, so we need to have $160,000 going into our after-tax savings every year. So here we go, 50 to 51, and we need to save another $160,000, and then we go to 52, we need to save another $160,000. You know, when you say it fast, $160,000 is not a lot of money. But when you have to earn it after tax, it is a bucket load of money. So I'm making light of it here because it is such a serious subject. You can't afford to get this wrong. When you're 53, we need to save another $160,000, and 54 and 55 and 56 and so on, all the way until we get to 60. So we've got to keep saving that $160,000 per year. But it gets worse. And now we need to add on our $80,000 that we're currently spending, which is our current after-tax consumption, so that we can live at our standard lifestyle that we're doing now. What we need to do now is add these two together. So 160 plus 80 is 240. And now the tax man comes along and says they would like their share. So I've put them in here at a nominal 30% tax rate, but it depends on what your tax structure is like. You can change that to suit yourself. So the tax on that would, let's say, is $70,000. It's not, but it's close. Now, when we add 240 and then we have to add on the $70,000, we come up with close enough to 310. I'll just put down $300,000. What's $10,000 between friends? So we need to have a net income coming out of your business of $300,000. So here's a couple of questions. What are you going to do if you don't have that level of income? Well, you could hope to win lotto. You could pray. You could run around in ever-decreasing circles until you disappear inside yourself, just worrying that how you're going to do it. Or you could give me a call. Or you could do something that's going to build your business. Now, there's another video on this website, on the YouTube, on the Business Doctor YouTube site, that's called the Revelation Chart. And you want to go and check that one out, which talks about building your cash flow and some of the things you can do. So if this model is of interest to you, I would commend to you that you grab that piece of paper, send me an email and I'll happily forward you a copy, or just mark one up yourself, similar to this sort of calculation here. Take it along and make an appointment to see your financial planner and ask for their ideas, because you also need to have the insurances that go along with this, and that costs you more money. And then you need to pay your taxes, you need to speak to your accountant, you need to make sure you're on board with everybody who's on your advisory team. But one of the questions that I can leave you with, because sometimes the business owner asks me, oh, is it all worth it? I just feel like I'm going to give up. You can't give up. You just can't. There is no, how many jobs do you know out there that are going to pay you $300,000? How many jobs are going to pay you that you're qualified to do that are going to pay you $300,000? So the only real choice you've got available to you is running your own small business or your own larger business and making sure that you're putting this level of saving away every year. And you can't afford to wait too much longer, because if you keep waiting, all it's going to do is extend this age here of when you can go into retirement. Look, I'm Jeff Miles, the Business Doctor, and this is a great tool that I use with my clients on day one in the first 5 minutes that they start the coaching program, just to make sure we know why we're doing this and why do we have to push as hard as we need to push. If you have any questions, please send me an email and I'll love to help you if I possibly can. Thanks and all the best.